thanks very much. I enjoyed the first talk on circadian rhythms, and I wondered whether we all need some hydrocortisone to keep us going for the rest of the day. I hope not. We're that mining company that reaches that point in life where you actually have to go and build something. So we're constructing a very large uranium mine in western Spain. The point about us, which probably makes us different to most mining companies, we're doing it absolutely right at the bottom of the uranium price cycle. In fact, uranium prices are so low, most of the industry, that is nearly all the industry, can't make money at the moment. And it's not small. We're not just any uranium mine. We're going to be one of the top 10 producers in the world, the only one in Europe, and by far one of the biggest single mine uranium mines in the world. We've got some very, very good economics. Most junior mining companies will share with you that they're going to be somewhere in the lowest quartile of producers, and they often talk about being in the bottom quartile. But the question you should ask then is, what's your capital cost? Because what normally happens if you're very, very low operating cost, you've got very, very high capital cost. We haven't got this rare combination of low capital cost up front, that's $100 million, and a very low operating costs, which even at current market, that is with looking at the forward curve, we make very, very good economics. And you say, why? Why is that the case? How can you be such a low cost producer, which so low capital costs, and you're in Europe? Normally costs are higher there. Well, there's two reasons. One is our ore body is very, very close to surface. It's about 4 meters to the top of the ore body, and it's got very good characteristics. It's got low strip ratio, very good grade, very good metallurgical characteristics. So that makes the operating costs low. But the real reason why the capital costs are low, which is the real win, is because you've paid for it. Basically, the Spanish have drawn down from the European Union, and they've built all the infrastructure we need. It's a bit roads, railways, ports, power lines. So if this mine was in, say, Australia, the upfront costs would be $250 million, not $100 million. So we have a $150 million dividend from the infrastructure that's in place. We also have, and I think you're all aware, that Spain's experiencing some difficulty. We have 21,000 people so far. In fact, that number's now 22,000 people applied for the first 200 jobs. And we're now seeing for the first time significant migration from the province which we live. So when we talk about we're going to invest in a community, we're talking about not just creating jobs, we're talking about rejuvenating a community. We're talking about giving opportunities for people to stay there, for the young people not to move away. And just to give you some specific numbers, these two villages that are next door to our mine, they've lost 75% to 65% of the population. In fact, it's worse than this. We're talking now about villages with less than 100 people and now less than 400 people. What's remarkable about this is in particularly the village of Villavieja, of that 400 people of permanent residents, 25% of them, 104, have applied for jobs at the mine. So when we say we've got community support, we have very, very tangible community support. So what we've done in return is said we'll create a priority for jobs for these villages. So we've gone out there and trained that local workforce, taken them, given them the skill sets, and just last week we put another 25 of them to work. So these are the people who would not be expecting to get any work at all for the rest of their working lives living in these villages. We've come along and created those villages. And just one aspect of that, just to understand the significance, for the first time in my life, I came across a situation called intergenerational unemployment. I was in a local bar, and the gentleman came up to me, he's my age, very well trained, medically trained actually, speaks English. And he was talking about his 19-year-old son applying for a job at the mine. That same man was applying for the same job. Father and son competing for the same job. So I'm very, very pleased to be creating 450 jobs in a community which will allow people to stay, allow people to keep the primary school open, to basically rejuvenate a community. More than that, we've got some fantastic people. All our team is Spanish on the site, and I'm very pleased to say I'm a big supporter of women in the workforce, in training, science, technology, engineering, maths. And this is Christina, one of our 2 female mining engineers, and she's a superstar. And I do encourage you to go to our website and listen to her. She's passionate about what she's doing, passionate about the industry, a great advocate for what's great about Spanish engineering in general, but specifically about our team on site. Just in terms of what we're going to do, I mentioned the top 10 producer. We're going to do £4.5 million a year. We have currently £60 million proved up. We expect, if we continue to reinvest, that's through exploration, to turn another £30 million into the proven category. And in that way, we create what we're looking to do is a long-term sustainable cash flow from this operation. One of the more conservative analysts who follow us is Ben Davies from Liberum. He's the one who has the lowest numbers on us, and he's definitely not generous, and he's definitely not enthusiastic about this, but even he is suggesting that based on his conservative assumptions, that will generate something like $150 million a year free cash flow, and bearing in mind, if we're able to convert that £30 million into proven category, that will keep going. You say, okay, fine, that's great, Paul. You're going into production at a time when the uranium price is on the floor. What's the future? What's it going to look like? Well, I think most of you know the story from China. China has this problem that was close to 68% of its electricity is generated from coal. And I just sort of suggest to you, next time you fly to Hong Kong, we have this big drama about Hinkley Point. It's taking 10 years and it's over in Somerset. Does it cost all that money? In the time it takes to do a Hinkley Point review, which is about 12 months, China is commissioning 6 to 8 reactors, building 20 reactors at any point in time. And when you go to Hong Kong, there will be 14 nuclear reactors within 1 hour of Hong Kong. It's the only way they're going to be able to clean up their atmosphere, to wean off coal, is nuclear. And you'll hear this debate about we should all move to renewable energy sources. China's also spending more money than any other country in the world on renewables. Renewables and coal, renewables and nuclear go together. We've talked about what it means in terms of future demand. Just to meet those targets, the ones I've said, China has to double its capacity by 2020 and double it again. So we think China will keep going. You constantly hear about the story about Fukushima, about China turning off its 57 reactors. Well, what they found when they turned them off was the electricity prices went through the roof and carbon dioxide emissions dramatically increase. So now Japan is turning its reactors back on. In terms of the existing reactor fleet that exists in the world today, most of them are full up in terms of fully contracted with uranium. But over the next 5 years, particularly the US contractors, but then it's closely followed 2 years later by the EU utilities, these guys are going to have to recontract. And there's £1 billion of uranium to be recontracted over the next 5 years. We're hoping to pick up some of that recontracting. In fact, we already are, because there's a very good reason why they want to come to us, because at the moment, 3/4 of the supply of uranium comes from Russia, Kazakhstan, and Niger. In fact, the European Union has 60% of its supply from Russia, Kazakhstan, and Niger. So we come along, building a mine in the heart of the European Union, OECD producer, then when the existing EU and US utilities recontract, they want to move away from Kazakhstan, Russia, and Niger and come to an OECD European Union producer. So we're picking up market share for this reason. And as I mentioned before, we're actively preparing the ground for construction. The crusher has now been manufactured. It's sitting in Madrid. It's waiting for us to clear the ground. The crusher will move to site, and we'll actually start building there'll be a concrete poured steelwork coming out of the ground and a 15-meter high crushing circuit being built shortly. I mentioned before about that we're at the bottom of the cycle. This is what the bottom of the cycle looks like. Those of you who are in other sectors, property in particular is a good example of this. What happens is you come off a period where the commodity price is falling, and what you start to see is production cuts. So if you see on the bottom half of this graph, You're seeing all the world's major producers cutting production. Kazakhstan, beginning this year, 43% of the world's production comes from Kazakhstan. They're supposed to be the lowest cost producer in the world, yet they announced a 10% production cut because they don't want to live with prices at this level. So you're seeing lots and lots of production cuts. We think what comes next after production cuts is supply concerns. And once you start seeing supply concerns, the uranium price can move up. All I remind you of, and so suggest to you be aware of the uranium price, it's actually quite a small market. And whilst the other commodities can go up and down once or twice in terms of multiples, the uranium price, when it goes, it's violent. Last time it ran, it went up 22 times. So the longer this elastic band gets stretched, the lower we are, then the analysts are saying the more violent the reaction will be. We obviously need to fund this mine. We did a raising last October. That's when the uranium price was absolutely on the floor. The uranium price was actually at $17 a pound. It's the lowest it's been for 12 years. We went to the institutional market in London. We needed to raise $15 million. We were massively oversubscribed. We took 30. We could have taken $50 million. Huge interest in the story. We've just made some director changes. We've appointed Nigel Jones from Rio Tinto. He headed up their marketing division for uranium, amongst other things. And Adam Parker, some of you may know, he founded Majedi, which is one of the big successful funds here in London. And we have one other appointment in train, somebody you may know, which we hope to announce shortly. I guess in short then, 2 years ago, we said we're going to put this mine into production. We've seen very strong interest in the stock. The stocks have performed reasonably well over the last 2 years. We're targeting a price of around 70 to 90 pence a share over the next 12, 18 months. And you can see that liquidity's dramatically increased. That's mainly institutional buyers. We've got about 4 announcements in the pipeline that we've talked about. One is we've told everybody that the capital costs for the operation are around $100 million US. We've now gone to those contractors with a front-end engineering design, so we'll report back on that shortly. We've talked previously about doing some more offtake agreements. We've signed offtake agreements around $43 a pound. We're looking to put some more of those in place. I mentioned before, we've now got the crusher in Madrid. We're going to bring that to site. And then finally, we'll do our final financing announcements. We'll back up all of that. So four good bits of news flow coming up. Thank you very much for your time.
Questions, anybody? Gentleman, just towards the back.
You mentioned China and you mentioned Japan in terms of nuclear facilities. In the EU, what about Germany? I thought they were closing them all down.
Yeah, they're cheating. Germany's energy vendor policy, which is to close down all nuclear post Fukushima, meant that they have to draw power off from France and Poland. So they draw from France, which is 75% nuclear, Poland, which is over 60% coal. And then when the problem for renewables, which, as you know, they put a huge amount of money into solar, huge amount of money into the wind, it all comes on at the same time, same in the UK. And so they actually get negative pricing. They actually have too much electricity generated. So they pay the Swiss to take it off them to do pump storage hydro. So if you go to Germany and talk about energy policy, it's a bit like talking to them about our migration policy. It's not good at the moment. But I think the better argument is there's no developed economy in the planet that's decarbonized without nuclear. So it's nuclear and renewables go together. So even Germany won't ever get there, 100% renewables, because until the storage equation's fixed, when the sun doesn't shine and the wind doesn't blow, you need a zero carbon baseload. And there isn't a zero carbon baseload without storage that exists today. So nuclear will always be 10 to 20% of any developed economy.
If the price for uranium stays where it is, how long before the company turns positive enough in terms of cash flow to start paying some dividends back?
Well, those numbers you saw from Ben Davis are not assuming any significant improvements in the uranium price. I'm not sure exactly what price he used. So the question for us is, what will we do with that cash flow you're seeing? The answer is probably one of the companies that most successful in London that we've got a lot of admiration for is CAML, Central Asia Metals Limited. They developed a big heap leach operation in Kazakhstan, single asset company, generated a lot of cash flow. They paid it back to shareholders in dividends. So I'd say philosophically, when we get to that point, that would be our response.
How long till that happens, do you think?
Till it happens, it's about we will commence production in 2019, then the ramp up to the $150 million is about 2 years after that. So 21, yes.
More questions, anybody? Gentleman there.
Is there any competition to speak of within the EU itself? Competing mines, for example?
No, the last uranium mine in Europe recently closed. It was in the Czech Republic. So we're the only major uranium mine being built in the world today, and we'll be the only supplier in the European Union. And to give you an example, the European Union's got 140 reactors and no supply. So 140 reactors and no supply, and 60% of the supply from Mr. Putin, Mr. Nazarbayev from Kazakhstan and Niger. So clearly, there's a lot of interest, and the Euratom, that's the European Union nuclear agency, is very strongly behind us because they desperately want to get some feed to secure that supply to those 140 reactors.
Sorry. You listed in London, and would Brexit make any difference to you regarding tariffs or whatever?
No.
Because you're a UK company.
No, because we raise the money in London, but we spend it in Spain. No, we can't see any difference at all.
Can you say something about the permits that you still need to reach production? Do you have any still to be signed, and what is the impact of the environmental protesters going to have on that?
Well, taking the first question, we'll be permitting till the end of the mine life. We will never be fully permitted. We have our permits in stages. So, for instance, the permits we have now are to do this initial construction. Then we get another permit to allow us to construct. And then when we've constructed, we get another permit to allow us to put ourselves into production. So we'll be constantly permitting. So we'll never be fully permitted. It's a progressive process. Where are we at with the process? Going very, very well. We have no permits outstanding in terms of being able to do what we do. So there's no permits on the critical path to meet the schedule we're showing you now. However, we still need lots of permits. So we'll be permitting for the next 10, 15 years. And regards our stakeholders, our other stakeholders, the environmental groups, I was with Arturo Larena yesterday in Madrid. He is the most famous Spanish-speaking environmentalist. He's got an audience through EFE, which is the big agency they've got in the tens of millions. So we're quite popular amongst the environmental groups, as you know, in Spain and around the world. And the answer is that we have to meet the absolute highest standards in the world. Every single report we put out gets challenged. Every single approval we get gets appealed. So we build that into all our schedules. And what I said to Arturo was, I thanked him because I said, your environmental groups are making us the best mine in the world, because every single report, every single aspect of what we do, we have to be the best in the world to get past that. So yes, they will be our stakeholders for the whole of the mine life. We know them well, and we'll work through every issue they raise, every contest they have of what we do. We have to deliver a result that's better than that to make sure that we have this social license to be able to operate.
All right, Paul, you was just saying there that you had an offtake agreement at $43 a pound, yet the spot price is $19 a pound. Can you explain why a utility company would come to you and pay you $43 when the actual spot price is $19? I'm sure there's a rational explanation for that, and you can explain that for me.
Well, as a man from Manchester down, you need a clear explanation from that, so I'll try and be as clear as I can. The spot market, the spot price, only represents at any point in time between 10% and 50% of the actual uranium traded. If you're a nuclear utility, you have to guarantee that you're going to get your uranium delivered to you. So you enter into what's called a term contract. And the term contract price is typically above the spot price. And so what these utilities have formed a view on is that this current spot price is far too low, so they're looking to contract into the future. And they've come to us and said, you're an OECD producer, you're a new producer, we want to bring you on, we're willing to write contracts with you that are rising going forward, starting in low, mid-30s, going up to 55, because they're concerned, because of the history of the uranium price, it only takes a small move, a shortfall in the spot price can rocket up. So the clear answer is because they're concerned that the spot price is incredibly volatile and they want to be absolutely sure. One is the supply, because we're from OECD, and two is at a price that's both good for us and good for them.
Okay, just as a follow-up there as well. Just on a scenario that, the spot price doesn't rise, in the offtake agreement, have you got a floor price?
Yeah, very good question. So what Dan's picking up on then, these aren't straight fixed contracts. No, we haven't got a contract for $43. What we've got a contract for that's half goes from 30, I think it's 38 to about 55, and that rises. And the other half has what's called a cap and a collar. And the cap is high 30s, about 38, and the floor is about 38, and the collar, the top of it, is about 65. So in other words, what they're saying is, we want to make sure you get a minimum of high 30s, but at the same time, if the uranium price goes absolutely ballistic, then we don't have to pay any more than 65. And typically, these contracts are structured in this way because these utilities are super conservative. One is they don't want us to fail, not be able to supply them, but on the other hand, they don't want to be embarrassed by having to pay a really high price. I hope that makes that clear. Thank you for the question.
Gentlemen, I'll just ask a question. Palladium prices, uranium prices are quite low at the moment. Is there some dumping in the market by Paladin going on at the moment?
No, I don't think so. I think it's genuinely oversupplied. And as I indicated to you, in any market where there's oversupply, the price goes down. It was interesting to listen to Christian talking about it, is that what will happen is eventually you get supply-side destruction. That is the only answer, is to an oversupplied market. And that's what we're seeing. We're seeing the world's biggest producer, Kazakhstan, is reducing production by 10%. The world's biggest listed miner, Cameco, is reducing production. And all these small mines around the world are closing. To me, that is the perfect time to pour concrete and build your new mine, because what happens next is supply-side concerns.
You mentioned earlier that your licenses to develop the site are a continuing process of having to get new licenses all the way through the process. What's to stop another company like Rio Tinto or somebody that's already in uranium coming along to the EU and saying, look, we'll take over, and where do you stand then? Do you get compensation?
No, the way the mining industry works is a good question, because it quite often happens, and it's been referred to earlier this evening, is if we get to a certain point, a certain critical mass, you get what's called M&A and activity, and people will approach single asset companies like ours and make a bid for all the shares in the company. It would not ever happen that we'd lose our title, but it could be that shareholders would be invited to accept an offer from another company to trade their shares for cash or for more shares. So M&A during the period we're going through now is a very real possibility.
If the EU fell out with you and didn't like you for some reason, maybe because you're British, following Brexit, it would be possible for another company to come in, but they'd probably be obliged to make a bid.
I don't see that as a scenario, us losing our licenses at all. I think we've got over 90 favourable reports, 38 approvals in place. We see ourselves as a very good corporate citizen. We've got a very talented Spanish team. And as long as we keep complying with all the requirements, I'm sure that would not be a possibility.
Thank you.
Paul, are you still trying to prove up further measured and resources?
I think
Or
the questions, a couple of questions have alluded to it. Clearly, because we've got 14 years initial mine life and 10 years of full production ahead of us, we're not short of ore. But clearly, we've got a fantastic geological endowment. We've only explored about 10% of our land holding. So we've just now launched an exploration program to try and make that bigger. So part of that strategy of adding value is to, one, build the mine, put it into production. The other one, what you're referring to, is to try and make it bigger.
By making it bigger, do you think that would attract a strategic partner in quicker, and be it finance or
I think
partnership?
everybody's trying to put me out of work. I mean, I'm happy to develop the mine and pay dividends, and if people want to make an offer, they can do so.
Good. A couple more questions.
To your point on the pricing and what you described as a sort of form of hedging on both sides. They're minimising or within a range what they're going to pay, but you're also fixing what you will get to a degree.
Yeah, it's very much, Dan was fleshing it out, it's right, it's a utility. Their fundamental requirement is security of supply. They don't want us to go out of business, they want us to supply, so that we have that ability to be profitable. That's what they allow us. But at the same time, they don't want to be embarrassed if the uranium price goes tremendously high. They want to have a cap to make sure they don't overpay. So very conservative approach to a supply contract from us to them.
What percentage of your turnover in a few years' time would then be under that sort of regime?
Initially, we're trying to get as much coverage as we can of the first few years to make sure that we pay back our capital cost. Then after that, we'll be seeking, hopefully as the uranium price is improving, seeking more and more exposure to the spot market. So initially, a lot of coverage, then hopefully reducing.
Gentleman down here.
Sorry, my question is, have you got enough capital to take you to production?
No, we have around 30 million US dollars. As I mentioned, the initial upfront is $100 million, so we're short of around 70, and that financing, as we flagged, is due in this period now, during the summer period. We flagged nearly 12 months ago that we're well down the track on that. So that's one of those 4 announcements that I referred to, is to show you that we've not only the cost will be around $100 million, we'll hit that number, it won't increase, but also we hope to be able to announce to you that what the financing arrangements are.
Is that 30 in the form of equity or in debt?
Cash.
And in terms of project participation, project equity in the project or debt finance?
Sorry, just to be clear here, we have around $30 million in the bank, and our total capital requirement is around 100. So if you like, we're short of 70 plus whatever the working capital is. So we've consistently said we're looking for around $60, $70 million in a financing to come in that we are due to announce over in this period now that we're in now.
But did that come by way of an equity raise in your capital structure of the company, or did it come by way of an equity raise or a debt raise?
Apologies, I missed the question. Yes, the money we have in the bank. The money we have in the bank now is due from the equity raise, the institutional equity raise we did in October. The financing we're about to do, we haven't announced the details of it yet.
Do you think that may be a private transaction? Or?
We've consistently said that we will not be doing project finance. In fact, we said that clearly in the last quarterly, and we said it will be a strategic style investor. And what the difference between a strategic investor and a financial investor is strategic investors want to be there for the long term. A financial investor wants to have a relatively short-term return. So we've made it clear to shareholders we're not project financing, we're looking at strategic style investment, and hopefully we're able to deliver that.
Would that be a strategic investor in the company or the project?
We've left the possibility open to both or a combination.
One more question, completely different. Is it possible, I mean, currently the offtake price you mentioned was at a premium to the current spot. Do you ever see, because obviously the prices, spot price is so depressed by historic standards, but let's say the price, rocketed up. Could you ever see the reverse happening, where the offtake price would be at a significant discount?
I don't know, but I'd love to explore that possibility. I'd love to be in that part of the world. So I'll let you know when it happens. I wouldn't know. I look forward to it.
Thank you.
Thank you, Paul. Thank you very much indeed. Thank you.